Ilya Gralic, you were a journalist many, many years ago when you had a proper job. You wish that resources markets had been this vibrant, this exciting, this fraught, this complex, this enticing, I'm sure, when you were a journalist. But in those days, things were easy. Certainly from a reporter's perspective, just the dynamics of this market and how 2020 has shaped it. I'd be curious as to your perspectives.
Sure. Funny you mentioned my previous career as a journalist. It was the beginning of the major bull run in the commodities when I started. Gold had just come off from its highs. Gold was frustrating at $250, and nobody had heard of the word copper. Then suddenly China decided to go for a growth spurt, and for the next 20 years, people were searching for copper, and we saw copper prices go absolutely crazy. We saw Billiton, who at that stage listed in London, and shareholders were frustrated at their share price being less than £1, becoming the behemoth that they are these days, becoming the biggest iron ore supplier into China, still being a major copper supplier as part of then BHP Billiton, and now back to BHP and South 32. So commodity prices are strong, and I think they're strong to stay. World growth, as much as we are seeing a dip at this present moment in world growth, will continue. And what is important to understand is that while the demand remains very robust in terms of this economic growth that I just addressed, I think supply is becoming complex. If you just look at copper, for example, the grades around the world are reducing. No new copper deposits have been found with significant grades. And if you do find significant grades in copper, for example, you're dealing with political issues that are very complex to understand. Plus an overlay of logistics, lack of infrastructure, means that the simple scenario of getting copper and then moving it to your end supplier is becoming more complex. The easy resources have been found, but if you believe in the demand side of matters, we need to find more supply, and that supply needs to be financed for us to then supply into those markets. So I am excited about the commodity market. There is an overlay of more responsibility from the producer side. I think what is important to understand is that while a lot of industries right now are battling with their balance sheets and needing to refinance, I believe the commodities and the resource industry had to go through this turmoil 10 years ago, brought about by their own hubris in terms of expanding into what was the China-driven commodity demand. But the balance sheets of resource companies are looking relatively healthy. And as I said, producers are being very cautious about expanding, which thus means that the supply-demand fundamentals for, I believe, all commodities is in a very good shape.
It's so interesting how different this cycle is. I mean, usually what happens in these boom times is we see lots of acquisitions, we see lots of M&A activity. And Bevan Jones, that's just not happening. Well, certainly not to the extent that we've seen in previous boom cycles, is it?
Yeah, I think especially in certain commodities. So whilst you've seen gold and platinum obviously doing very well on the back of increased investor demand, as well as base metals, as Ilya has just mentioned, things like coal and natural gas are really actually suffering. Because, as Ilya again pointed to, the investors are more looking into ESG, environmental, social, and governance factors, and impact investing. So the world is also focusing very much on CO2. So any commodity that's linked into that is really taking the brunt of that, and that's quite significant for South Africa as a major coal exporter, obviously. So investors are few and far between in that space, and people are having to look much more towards private equity deals, traders coming in with offers of offtake and private financing, etc. And the banks obviously have become a lot more circumspect as well, because everyone is being driven by effectively the effects on climate. Elon Musk the other day tweeted that he's looking for nickel, but he wants clean nickel. So he's going to struggle a little bit. I mean, most of the decent nickel out there is in Indonesia, but the Indonesian government has been quite clever, and they're not letting anyone export nickel ore. So he will have to build a Tesla factory in Indonesia to be able to, export the finished product, which is what they're after. That's something that South Africa should probably try and focus on more as well, is the beneficiation of our own ores.
Are we seeing, I mean, governments generally getting smarter about this, saying, hold on a second, I have a rare commodity. I have a commodity that the world wants. Let me start dictating the terms of export. You can export a finished product, you can't export the raw material. I mean, what options would there be for South Africa, Bevan, in terms of what we have that the world doesn't have? The world, we have some platinum, we have good reserves of platinum, but there's platinum elsewhere. We don't have much, we don't have any gold left, and that's not useful in industry. What industrial commodities do we have that we could leverage?
Yeah, I think for the new economy, the climate change economy, platinum, nickel, copper, as you mentioned, chrome, those are all strong for us, manganese, and we can look at beneficiating those. All too often, Africa has suffered from producing the ores and the concentrates, and then the finished markets are all in Europe. So the LME, the London Metals Exchange, the 3-month contract was because it took 3 months to ship ore from somewhere in South America or Africa to London, which is where all the buyers are. So really what we're trying to do at Source Markets is to create local commodity market prices, African commodity market prices, so that junior miners can benefit instead of traders coming in and really taking all that margin and offshoring the profits. We want to see our junior miners benefiting from that. So I think in those commodities that we mentioned, we've got a significant advantage. But then also into our neighbors in Africa, there's more manganese in Botswana, there's lithium in Zimbabwe, and plenty of chrome and nickel as well. So I think we can really look at becoming a hub if we put our minds together, and we created sort of beneficiation points in the region. We could really do this quite cleverly, yeah.
And we put our minds and our minds together as well. Thank you, Bevan Jones. Tawana Madondo, what's your perspective on this? I mean, you've got a very effervescent Ilya Graulich, a concerned Bevan Jones, I think. I'm not too sure that he's as bullish about the commodity cycle, but he sees opportunities in specific green commodities. What's your perspective on it?
So just from what Bevan was saying, I mean, just touching on that, I think we are in a boom as we currently in this current COVID environment. But I think we shouldn't get too excited because I do think some of the price trajectory upwards is really around what's happening with the COVID environment, what's happening from a supply uncertainty perspective. You kind of like look at what's driving some of the commodities like copper. It's really to a large extent on the premise of there is supply concerns given what's happening in South America. Yes, there is a big stimulus package happening in China. So I think the way we should look at these prices is, one day we will get out of this COVID environment. But the question is, where are we going to reset, or what's going to be our base? And from our perspective, from a bank, that's how we'll be evaluating opportunities where people prospectively coming looking for funding is post-COVID, what's the new base in order to assess the competitive nature of the various projects.